The real truth about credit repair. Let's go. Hey, David, what's up, man? How you doing?
Best day of my life.
Man, I appreciate you coming on and talking with me today. This is a topic that absolutely never gets old. Credit and what people can do to improve their credit is what you one of the things you specialize in, and you and I know that this is way more than just owning a home, which is what I specialize in, obviously, and you do a lot with that as well. But I'm always telling people, like, whether you want to buy a home or not, you still need to make sure your credit is taken care of. And so today we're going to give some people some myths, because this is a some people have a negative connotation when it comes to credit repair, and what you guys do, it's different. You have a different approach in how you work with clients, and so we're going to get into that. But gives people some context. How long have you been in this business? The Phoenix Group, which great reputation, so people can go look you guys up as well.
Absolutely.
So do that, but give people a little bit of context about you and how long you've been doing this credit restoration.
Absolutely. Absolutely, man. And James, I really appreciate you inviting me on. Super excited for what the future holds for us
Yes.
and all that. But I'm a credit expert.
Mhm.
I work with a company called the Phoenix Group. I've been in this industry since, well, March 8th down to the day will make 11 years for me. So
Mhm.
I'm not a rookie anymore.
Yep. Yep.
This is my bread and butter. This is not a side gig for me. This is
Yep.
what I clock in every single day to do. And one of the things that I try to bring to the table is I'm a true credit expert. I know
Yep.
this stuff inside and out. This is you mentioned something about uh, people are skeptical when
Yes.
you talk about credit repair, and uh, I create buying power,
Yep.
which is a different mentality that I try to let people realize. Buying power means that doors are opening and life is going to be easy.
Hmm. So one of the things I want to piggyback on, because this is really important that you said this is what you do. This is not a side, because I know a lot of people that are credit repair, credit restoration, and it's just like some side gig that they just kind of do on the side.
Hmm.
So this is super important that people catch that this is what you do. This is what you do 24/7. This is all you do is
Hmm.
you help people increase buying power, and ultimately to me, it's more. It changes life, because the reality is you want to own a home, credit. You want to get an apartment, credit. You want to buy a car, credit. You want certain jobs, credit. Like there's no way to escape it. And
Hmm.
I talk to a lot of people, and I tell them, like, you have to take this head on. Like, just pull everything back and focus on it, because it won't happen. It doesn't happen on accident. And you can accidentally get a negative score, right?
Hmm.
Just not pay attention, something
Absolutely.
happens. You can't accidentally get a good score.
Right. And it goes back to the phrase, and many people have heard it. Credit is a lifetime to build and a day to destroy it.
No doubt.
This is and going back to the topic, the misconceptions. People
Yes.
feel, sometimes people feel like there is a quick fix.
Yep.
Um, and I pride myself on being pretty forthcoming. I'm not here to sugarcoat. I'm
Yeah.
not Willy Wonka. I'm not here to blow smoke and tell you that life is rainbows and unicorns, because going through an issue with your credit, uh, I tell everyone it's not easy. It's not fun.
Yeah.
But if you want to get past it, we can build a game plan that can be meaningful.
Yep.
And you got to do the work. I don't have a magic wand to just make problems go away, right?
Yeah.
So, hmm.
So yeah, keep that going. So you talk about some of the actual misconceptions of this, because again, I mean, I talk, you and I both, we talk to a ton of people, and some people say they had a negative experience with this company, or they don't want to pay money because it doesn't work, and all this stuff. So let's really dive into that, and unpack some of that for people.
Sure. And one of the first things that really comes to mind when I think about over my experience of more than a decade now,
Hmm.
what one of the main misconceptions is, and it kind of drives me nuts that people think that sometimes they're not going to have to pay this stuff back.
Right.
Um, you know, it
Yeah,
kind
no.
of blows my mind that you
Yes.
know that, and that goes back to some of these other companies. You know, they're like, oh, don't worry about it, we'll take care of it.
Yeah.
Well, you're not going to get a late payment on your mortgage from last month removed because just because you went and disputed it.
Right.
You cannot go and click a button on Credit Karma that is going to make your federal student debt go away.
Right.
You can't pay somebody $100 a month to take you from a 550 credit score to a 7 or 800. It
Yep.
just doesn't work.
Yeah.
Um, and I know that we had spoke a little bit earlier, and one of the another one of the big things is there are people uh, out there giving advice, and we go to the internet and we look for information, and we look at the blogs, we go to Credit Karma or wherever, trying to figure out what do we need to do to fix our situation.
Right.
And in my experience, they are good people with good intentions that
Yep.
really just don't know how this stuff works.
Yep.
They're telling people, well, you need more trade lines. Reality is, if you got two credit cards, auto loan, and maybe another installment, you're good.
Yep.
You don't need to have 10 credit cards that you
Right.
just secured for $300 a piece.
Right.
So, and it's something common that I see. I'll look at a credit report and I'll see 10 open revolving credit cards, and it's got good payment history, and that's fine, but you've got 10 cards with $3,000 of available credit.
Yeah.
I can
Yeah.
smoke that in one,
Yeah.
with one credit card.
Yep.
So, it's there's a lot of misconceptions.
Yep.
You've got to be very careful. You've got to take care of your credit.
Yeah. So keeping it with that, so you had mentioned that the having 10 credit cards, which I can't even sleep thinking about that personally. Like, and then, I mean, obviously I look at a lot of credit reports and I'm like, man, I don't know how people sleep. I
Yeah,
just don't. When
yeah.
you've got 10, 20, yeah. So it's funny when I pull a credit report and I look and I know just see how long it downloads.
Hmm.
And I'll
Yeah,
start scanning through and I'm like, oh my goodness, I don't know how people sleep with that much credit. You
and to kind of
and you don't
start,
need it. Go ahead. Go ahead, David.
yeah, yeah, just to kind of touch on that, retail cards.
Yes.
Why does, and I get it, women love the Ulta. They
Mhm.
love that Ulta card.
Yes.
Um, but or JC Penney's and Kohl's
Yes.
and the Home
Macy's.
Depot,
Yeah.
I
Yeah.
I never I have never once in my entire career instructed somebody go and get a Kohl's card.
Right.
And the reason for that, people can say don't get a retail card, but let's talk about the reason behind it, right?
Yeah. Yeah.
Well, the reason is that these card companies don't tell you how their interest is.
Yes.
It's not your normal credit card interest. It's way higher. They might rope you in with, hey, you're going to save 15%. We got promotions, but you
Yep.
know what? I believe it or not, I got one Chase credit card that I use for almost everything,
Hmm.
and it gives me rewards, and it's a better interest rate, and I can walk into any store. If I want to go buy makeup for the wife at
Yeah.
Ulta, I can go in there and get a much better deal on
That's
my
right.
Chase card than I can with an Ulta card.
Right.
So you can, and it's something that's actually going to give me cash back, not just $20 off my next
Off the
purchase of
first one.
$300.
Right.
So we got to be strategic.
Yeah. Well, people get caught up because they're there, and I mean, I get it every time I go anywhere. Pretty much at this point, you want to open a car, save 10%,
Hmm.
and so save. They know what they're doing. Obviously, that's why they do it the way they do it because they know people are. It's kind of like having the candy at the checkout line, right?
Absolutely, it's
It's the same thing.
hmm
They put it there because it's like an impulse thing, and
sure,
people would just grab it.
yeah,
So
and they also mention, and this is going to sound horrible, and just know that, guys, everything I say comes from a place of love. But this is going to sound horrible. The person offering you this credit card,
yeah,
they're working a register at a retail store. There's
mhm,
nothing wrong with that. But
yeah,
what do they know about it? Oh, it's not going to hurt your credit. We're just going to check.
right,
So you're just going to do a credit check. That
yeah,
hurts your score.
yeah,
And so another misconception is that people do soft pulls. There are some true soft pulls,
right,
but the way that I break this down for my clients, and when I'm giving classes and whatnot, is anytime you give your information to somebody else
yep,
to see if you're going to qualify or pre-approved or anything, that is always going to be a hard inquiry.
Right.
Anytime a consumer for themselves wants to go to a website and look at their own credit, Credit Karma, Experian, Identity IQ, My FICO, if you're pulling it for your own information, that is never going to impact your score. You'll
Right.
see it. You'll see
Yes.
it show up on your credit report because they
Right.
have to report who's looking.
Yep.
But it's not a hard inquiry. But if
Got
you're
it.
trying to get finance for something, understand that that is always going to impact your score.
So two questions. Well, I'm gonna just hit you with the first one.
Sure.
So mortgage. Obviously, that's the arena that you and I work in a lot. We help realtors get clients that may not be credit ready, help them get to a point where they're going to be credit ready, and then they become a purchaser for real estate.
Absolutely.
So I want you to address this. If I have my credit pulled by multiple lenders within 30 days, okay, is that true? So it won't impact their credit more? Because I just had this come up. I just had a client ask me this last week,
Hmm.
but I want your answer on this now
Sure.
because you are the expert. So I want to get
Uh,
that from you.
Absolutely. So, as a consumer, we have the right to shop around.
Yep.
We don't have to just stick with the first person that pulls our credit.
Yep.
So you do have a window, and it's about 30 days for a mortgage.
Okay.
Now, sometimes, and this goes back to FICO,
Yep.
the credit bureaus, and if you look on Experian.com, Experian.com is one of the best sites that can give legitimate information, not just
Okay.
through the monitoring service
Yep.
and not none of the credit card recommendations or anything like that. But if you go to Google and you search a question, and there is an answer that is coming from Experian, that's legitimate. It's pretty informative, and sometimes they will take into consideration up to 45 days for that mortgage inquiry.
Got
Uh,
it.
but give yourself 28 days to
Right.
go and look for a mortgage. I
Yep.
mean, realistically, before you go and apply, you need to be ready. And so, if you know that you're going to shop this around, well, let's go talk to this one today, and
Yep.
then within a week, let's get the information from the first one, and then let's go to the second one immediately.
Right. Okay.
So you can do that.
Yep.
And I know we're talking mortgage. Same thing with auto misconceptions, right? People call me up and they say, David, I've got 50 inquiries from when I went and applied for this auto loan. I want them all
Yes.
gone. And
Yeah.
I say, well, unfortunately, I'm not going to touch one of them. We don't mess with inquiries. The reason being, again, you have the right to shop around. You
Yep.
signed the paper and told them, yes, run my information. That dealership doesn't have a a company in their back pocket. They've got their in-house financing,
Right.
but they
Right.
want to find you the best company, the best bank to do business with. And
Yep.
so they're going to shop you around. But that's not like you just got 50 inquiries.
Mm,
So, and here's the thing, if I got every single one of those inquiries deleted, your score might change 5 points. It's not significant. It's a whole
mm,
lot of work for not a lot of value. And
got it.
unfortunately, there's a lot of companies out there that they bank on that. The first round they're going after name variances and
Yep.
addresses and inquiries, and it's like, look at all the good stuff we did, and it didn't do anything for your score.
I think they're just trying to justify the fee. It's really what it is. Whatever that is. They just look what we did. Is it really moving the needle? No, obviously not much in a lot of
And
cases.
typically, and this is something that I've seen, and I'm not trying to take shots, but I'm gonna take my shots.
Yep.
People will get with certain companies and they address the inquiries and name variances, addresses and inquiries. Then
Yep.
they also tell them, you know what, I'm gonna shoot you over this link. Apply for this secured credit card. Get that going right away.
Mm,
And so, after their first round, they're like, look at all these deletions we got. Look at how high your score jumped up. And it jumped up 20, 30 points because they got a new revolving card when they had none.
right.
Makes sense. So it's kind of like, okay, well, it's working. They got deletions. My scores went up.
Yep.
Maybe the same thing will happen in round two. And so
Got
they're
it.
a little passive. I can stick
Yeah.
with the program. Okay, well, it didn't happen in round two. Maybe it'll happen in round three because,
Yeah.
it happened in round one.
Makes
So,
sense. Yep.
mhm.
So the second question, and I hope everybody really heard what David just said. So it does not affect you if you're a mortgage specifically. Now, credit cards, that's different. Let's be very clear. You go apply for a credit card today, tomorrow, the next day, it's dinging you every single time.
Every single time.
there's no window for that. But for a mortgage, yes, because this question comes up all the time. People want to know, is it okay? Ultimately, I don't want them to go anywhere because I want them to use me. But anyway, but yes, you can shop around for about, keep it at 28 days. And David said 28, keep it at 28. So you don't run the risk of even getting close to 30 and then
Hmm.
it dinging your credit again.
Hmm.
So, one other thing I want you to address, and then I'm going to get into the what we've got coming up for realtors
Sure.
next Wednesday. But FICO scores. So we want to talk to I want to talk to you about Credit Karma as an example, and really all these banks now do it. I know
Yeah.
you mentioned Experian is very pretty accurate, but I want you to address this Credit Karma versus a mortgage because I get it. Oh, my credit score is 650. My first question is, where'd you get the score? Every time. Where'd you get the score from?
Hmm.
My bank, Credit Karma is obviously, they do a great job of marketing, which is why people know them. And people think they're score. And then they get frustrated when I pull it and it's nothing like Credit Karma. So
Yeah.
break this down for me because this is
Absolutely.
so important.
Love it. Love it. So you've got to understand, like you said, Credit Karma. How much do you pay for it? Right.
Not a dime.
But how much money are they trying to get out of you
Yep.
by saying, apply for this, apply for that?
Yep.
And it's what I call a trap site. Now, the problem with
Yep.
the scores, right? Let's get to it. The problem with the score is the algorithm that they're using.
Yes.
So there is a mathematical formula that is used to build your score. With FICO, FICO is the algorithm.
Yep.
Fair Isaac Corporation, they have built this mathematical formula to look at a credit report and determine what kind of score they're going to get. Now, Credit Karma and several other entities out there, they use what's called a Vantage
Advantage.
3.0.
Right.
And as long as I've been in this industry, I have not found one company or one business that will use Vantage for any sort of pre qualification.
Yep.
No personal loans, no auto loans, no mortgages,
Yep.
no credit cards, nothing. So, what's it good for?
Marketing.
Gives you the warm and fuzzy. At
It's
least I got
marketing.
something to look at.
That's it. Yeah.
Now, to follow up with that, one question that I get pretty regular is, David, what is my real score? What's my real credit score?
Hmm.
And unfortunately, the only way that I can answer that is by asking another question. What are you trying to buy?
Yes.
So FICO, again, the algorithm, there are many different models.
Yeah.
And with mortgage, it's very specific, it's very consistent. Experian is a FICO 2, Equifax is a FICO 5, TransUnion is a FICO 4.
Right.
So each bureau's got a different FICO model that they're going to look at to qualify you. Some banks, like for instance, RBFCU, they
Yep.
typically look at a TransUnion FICO 8 for their auto scores. And so if you can, when you start to understand this, and it's something that I put in my arsenal. We've got a spreadsheet that we keep track of. Hey, what did they pull from?
Yeah.
When you know what entity is going to pull from what, you can be very strategic when you go and get loans.
Mm,
So I know that my Equifax, FICO 4 is my best score. Let me
yeah.
find somebody that'll do some lending based off of that. You
So
know,
how do you do that? How would you go about? And I don't know if this could take us down a whole never, but I've actually, you're the first person I've actually heard that. Because I usually tell people when you go to, like when you're going to a car, let's use car dealership for an example,
hmm
because these creditors, car, furniture, whatever it is, like they don't pull multiple bureaus like we do as a mortgage lender, right?
hmm
I tell everybody, I don't think there's anything else that you purchase, and you correct me if I'm wrong. I don't think there's anything else that anybody's going to purchase where they're going to have all three credit bureaus pulled other than a mortgage.
it's up to the entity. But you're right. Typically, no.
Yeah, it's like one.
It's yeah.
Perfect.
And I mean, to kind of touch on your question, how do you know? Well,
Right.
has anybody ever asked? Have you ever called up a bank and said, "Hey,
Yeah.
what bureau are you going to pull from? What scoring model are you going to use?"
Ah,
You know, and
hello.
and if
That's
you if you
simple.
And again, I know this sounds a little degrading, but the person that answers the phone when you call a bank,
Right.
they typically get paid to answer the phones. They may not have the answer that you're looking for.
Right.
Sometimes, you got to be respectful, got to climb that food chain a little bit and get to the department that you need to find
Right.
the information. But yeah, you can call and you can ask, hey, if I do this pre-qualification with you, what bureau are you going to look at? So if you
Wow.
go to a dealership and you say, I'm looking for a GM Financial financing, well, call up GM Financial. What bureau, what auto model are you going to pull? And it's
Right.
probably going to be an Experian FICO 8 or 9 auto score.
Got it.
So, and one of the reasons I like Experian.com for a monitoring service, anyways, is because at least for Experian, I mean, for all three, it gives a FICO 8 general consumer based score.
Uh-huh.
But with the Experian, with the paid membership, it gives you other models. It gives you a credit card model. It gives you a mortgage model for Experian. It gives you a auto lending, but it gives you FICO 8, FICO 9 auto.
Right.
Several different ones, and it's a good tool.
Okay. Listen, that's gold right there, David. Again, you're and I've spoken to other so-called credit, experts. You just broke down a few things that I had never even heard of before. But I mean, picking up the phone and asking, "Hey, what do you guys use?" Hello, it's not rocket science.
Yeah, yeah. I mean, it seems,
um,
and I mean, sometimes it can be difficult, but
yeah, yeah,
at
yeah.
the end of the day, I mean, we've done it many, many times. And the other thing is, when I'm working with someone and they tell me, well, I need to get my auto financed or refi, or I'm
Mhm.
looking to buy a car. Okay, well, I've got all of their information in front of me. I'll pick up the phone and I'll start calling around. Okay, you're in Florida. What part? Okay, let me look at some. Let me hop on the internet, find some credit unions around you.
Right.
Pick up the phone and call them. Hey, I've got a client looking to do a pre-qualification with you. What auto model are y'all going to look at? What score are y'all going to use? And they tell you. So uh,
Simple.
nobody's ever thought of that, right?
No. Pick up the phone.
I
Hello.
mean, just call them.
Ask. Ask a question.
Yeah.
Now, of course, on the mortgage side, you can't do that because
Nope.
we don't even care what bureau. That's the thing for a mortgage, of course.
Hmm.
We're just gonna take the middle score, no
Yeah.
matter what bureau it is for us.
Hmm.
And I've seen, I see there's a reason why people have three different scores because they're all, which is frustrating. It really is kind of frustrating. But I tell people the other thing is that creditors, and I didn't even know this up until maybe a few years ago, kind of getting really, creditors are not actually required, and correct me if I'm wrong, they don't have to report necessarily, do they?
No. So
Yeah.
here's a misconception. The credit bureaus are some sort of government entity.
Right,
No,
right.
they're
Yes.
not. They're
Yeah.
not. Or the credit bureaus are on my side. That's why when I do this dispute, they're going to help me out.
No.
Well, let me break your heart real quick. These credit bureaus are out for profit companies. They're here to make
Absolutely.
money.
Yes, they
And
are.
the way that they make that money is by charging creditors to report your information and selling that data to finance companies for
Yeah.
lending purposes. So, if that's the case, um, you know, like why doesn't your water bill or your cable get reported,
Yeah.
right? Well, they got to pay to have that done. Why do they want to
Mhm.
do that when it's something that you should be paying anyways?
Yep.
You know,
Unless it goes into collections, that's different.
now,
They
well,
will.
there's an incentive, right?
Okay.
The
Yeah.
incentive
Exactly.
is let
That's
me let me hurt your buying power,
right.
keep you from getting approved
Exactly.
for the next one, and
Right.
maybe that's the motivation you need to pick up the phone and call me.
Yep. Yep.
So,
Very
yeah.
good. Wow, that's so good, man. So, again, we both do a lot with in the real estate industry, and
Mhm.
so we are going to have a class on Wednesday, and that is the Wednesday after the Super Bowl. So that's going to be Wednesday, February 16th. That one's going to be in Houston. I'll put the contact information in for that. So uh, if you're a realtor, you want to learn, David is amazing. Like this is stuff that's going to end up putting more money in your pocket when it's all said and done. Assuming your clients follow his direction. That's number one. Let me say that because you can give the plan all you want to, if the person doesn't follow the plan, then you can't expect to have necessarily the result that you're looking for. But we're going to jump into this real quick. So February 16th, we're hosting a class. That one is going to be within Houston at the Goosehead Insurance Office. I'll put the all the contact information for that one. And then the next day, on February 17th, we're going to be hosting another class. You're going to teach. I'm going to host at the Keller Williams office in Katy. And you don't have to be with Keller Williams, by the way. If you want to come, you can just come. It's fine. But we're going to have those classes on Wednesday, the 16th, and then the 17th. So for you and I, again, we do a lot in the real estate industry. How is this something that realtors that have clients, okay, they're not ready right now. They might need credit help, like some serious help. There's some simple things that I can give people. Maxed out credit cards is a relatively it's a simple thing to do. Uh, well, it's easy, but it may not be simple just because you can't may not be just go pay down all your credit cards. But I see that's one of the main things when people's scores are low. I look at credit cards, the balances are maxed out. Okay, but you're going to give some advice for realtors and a whole lot more information in this class. But just touch on a little bit about what realtors can
Sure.
kind of do and things that you'll be able to help them with to prepare these buyers if they're not ready right now.
Sure. And this is a good opportunity for me to throw my elevator pitch.
And you
Um,
should
right.
absolutely.
So basically, I provide credit restoration services for the mortgage industry
Yep.
specifically.
Yep.
I work with real estate agents, loan officers pretty much across the country. When you run into a buyer that is having trouble getting approved, that is where I step in. It can be because of low credit scores,
Yep.
DTI issues, maybe their student loans are in default,
Yep.
maybe they got Cavers issues or LexisNexis issues. Um, Whatever the scope is, it's my job to break it down and build a game plan for it. It's not just, hey, let me go and dispute some stuff. So
Yes.
there's that.
Yeah.
Now, as far as being a real estate agent, you got to understand that you are on the front lines. You are getting this buyer first,
Yep.
and you are catching them at the highest emotion. They're super excited. They're ready to go. They come to you and they say, "I found the house of my dreams. I want to buy it today." And then you say, "Okay, well, are you pre-approved?" "No, let me get you over to James. Let's get you pre-approved."
All right.
James runs credit, and he's like, "Well, this just I just don't see a way to get them there." What's going to happen to that buyer? You're going to have to break their heart, right? And now you tell them, "Well, you're not there, but here's what you need to be doing as a real estate agent. You need to be working with somebody who has a legitimate avenue to get these people eventually to the closing table. They
Yes.
may not be able to buy today, but just because and don't take this the wrong way, just because y'all told them no doesn't mean that they've given up their journey.
And
That
hopefully they don't. Yeah.
Right.
Yeah.
And believe it or not, one way or another, they're probably going to find me. But
Yeah.
the thing is, if we can work together, real estate agent, loan officer, myself, we can create this network of professionals that are experts in our field. And no matter what that buyer runs into, we're going to have an answer for it.
Yeah.
And so when they get that denial and they're down in the dumps, it's not necessarily bad news. We had to You can tell them we had to find out. Now that we know, the
Yep.
good news is I know somebody that specializes in this exact same thing. Let me let you talk to him. He'll put you on a game plan. And one thing that I'll tell everybody, whether they're a business partner wanting to work with me, whether it's a client that might need some help personally, um, if I can help somebody, I will. And if I can't, I am not in the business of wasting time, and I am not here to waste anyone's money. At the very, very least, I will break down their situation, let them know exactly what it means, and I will give them the best professional advice there is
Yeah.
to help get them on the path.
Yeah.
So, as a real estate agent, again, you're out there first. You are the one nurturing these buyers. You're the one, guiding them to success, but you've got to build your team.
Yeah.
You've got
Yep.
to have the tools in the toolbox.
No doubt about it. And with realtors, a lot of realtors are about now, now, now. I was a realtor for a long time, so I get it. But I also understand that you'll need clients 6 months from now, a year from now, a year, as long as you're still in the business. And so the other way to look at this is like, be a service to people, right? Even if you can't get them into a house in the next 30 days, they know people too.
Hmm.
They know people. So from that perspective, you don't want to just, I can't help you, move on down the road to the next person. Get these people, if they're not credit ready, get them with David, let him help, and get them to a point where maybe it's 2, 3, 4, 6, 12, whatever it is. But as a realtor, you got to be thinking about 6 months down the road, to not just right now. Because the reality is, most people, when they initially start looking, most people are not necessarily ready to buy right now anyway. A lot of people, it's a kind of a process, or they've already been doing some research prior to meeting the realtor, right? A lot of people know with online now, they just jump online and
Hmm.
they start doing their own research. But people are looking at these Credit Karma scores and they think they have a 700 score. Then I look at it and I'm like, no, you don't.
Right.
You
Yeah.
need David.
Let's come on down. Come on back
so,
down to earth.
so
Um,
go ahead, David. Go ahead.
yeah, and to follow up with that, um, I won't put her out there. I'm not going to put her on blast, but this is not an instant satisfaction kind of
Yes,
service.
absolutely.
Um,
Yeah,
if they really want it, it's going to take some time.
yeah,
Now, don't get me wrong. I had a client who got off the phone with this morning. They got stuck in an adjustable rate mortgage many
yeah,
years ago, and the roosters were coming home. They had a $40,000 payment that was about to be due, and
yeah,
so they were up against it. And we got 1.5 rounds of our audit process out, and they were like, "Look, come March, we've got to make this $40,000 payment." Pulled a credit report. I said, "Okay, let's get back to the loan officer." And they're in California,
yeah.
and sure enough, they're signing loan docs today. They were able to
So they
refinance.
refinance.
Yeah, they pulled
Yeah,
$90,000 out of equity. They're
yeah,
going to use that to put back into the house. They avoided that $40,000 payment. So we can do things really fast. But
yeah,
I'm going to manage those expectations. But I digress. One of our loan officers, or I'm sorry, one of our real estate agents in 2019, we built a relationship with her, and she decided, you know what, I'm fully dedicated to this. Any buyer that I send to my lender, I've instructed all of my lenders, if they're not qualified, you get them over to David and the Phoenix Group.
yeah.
And she started just building up this pipeline. Obviously, we're not going to be able to help everyone,
Yes.
but come 2020, right, all that was happening, I'll put it this way: there is no such thing as a slow season for her, because
Yeah.
she has planted those seeds. They're
Yes.
coming,
Yep.
and in November of I think 2020, we sent back like 6 people that were ready to go on top of
Yeah.
the deals that she already had. She
Yeah.
made probably an extra 150, $200,000
Yeah. It
in
is.
Austin.
But that's probably like three houses in Austin.
Yeah. I mean, I think she had about 18 clients
Yeah.
in a year that came back and closed. I mean, these are people that you never would have sold a house or helped buy a
Yes.
house. And they don't remember me. I mean, they do. They remember us, but at the end of the day, it's thank you so much for getting us over to them. You
Yes.
made this happen.
And you know what, David? I've found that these people are so much more appreciative because initially, when they're being told that they may not they can't qualify right now, it's a little deflating initially. I don't care who you are. Like
Mhm.
when you want to do it, and then you're like, you're not quite ready right now. It's a little bit deflating. But when you, whether it be me or a real estate agent, puts that person with someone like a professional like yourself to set them up for success down the road. They are so much more appreciated. And this is my experience where I've done this with people before and they come back 6, 8, 12 months down the road, they buy and they are so happy and more appreciative for you helping them. So
Yeah.
this is this is what we're going to discuss and a whole lot more in this class on February 16th and 17th. So for people that may not be able to attend class, or if you are not a realtor and you want to reach out to David, what's the best way for people to actually get in touch with you?
So I'll give my office phone number, 469 840-4583. It is a
Okay.
landline. You can't text me, and this is for your protection as much as it is ours.
Yeah. Yeah.
As a somebody who deals with very personal information for my clients,
Yep.
their files stay behind two locked doors. I'm not going to have people texting me. So, if you want to do something written, well, you can have my email address, David R at the Phoenix Group. It's right here at
Yep.
thephoenixgroup.com. There is no O in Phoenix. Also our website, www.thephoenixgroup.com. You can see all sorts of content out there, and do your research. Look us up. Look up. Find me. Find me on Facebook. However you want to reach out to me, I'm always open.
And I'm going to share. So if you guys want to reach out to David, the Finish Group, and then again, you can find him over on Facebook. That is his information right there for you guys. reach out to him. He is a great resource. Like this information, David, it's to a point where I explain to people like this is just so beyond just owning a home, and of course that is in my that is my that's my my what's what I do for a living. Excuse me.
Hmm.
I help people get into homes, but I also understand that this is way more than just you getting into a home because it really does affect every single one of us. And I tell people, like it or not, that is how we get judged in a lot of what happens for any type of purchase that that you're not going to pay cash for.
Yep.
Um, you're going to be judged by your credit, like it or not. It just
Unfortunately,
yeah,
it's
exactly. I mean,
it's
it is what
something
it is.
that unfortunately it's something that um, because you got to understand your credit report is a history. It's a
Yeah.
history of how you have managed, other people's money in a
Yep.
sense, and it goes back to character. And I
Yep.
get it. I know this more than most. Life happens. Life
Yes, I
happens
was
to
going to say
people.
that too. Yeah, stuff happens. Go ahead.
Yeah,
Yes.
and it's not that we can't understand that you went through a tough time. Just because you got negative information or bad stuff on your credit report doesn't mean that life is over.
Yes.
But what needs to happen is you've got to get out of that funk.
Yep.
You can't just sit there and continue to miss
Yes.
payments and have collections and
Yep.
not do the right thing. You've got to be able to show that you have changed,
Yep.
and that now, even though you may not have the best score, you're paying people on time. You're
Yeah.
keeping your credit cards low. You're managing your credit better than that tough time that you went through, and you can get qualified.
Yeah.
Underwriters are scary, but they're also understanding. So,
They are, and there are situations, and like I said, life happens, man. I've
yeah.
had stuff happen to me. I've had stuff happen on my credit report.
Hmm.
Younger, but after being in this business for so long, it's become even more important every seems like every year. It's more and more important to have credit, and I just see the impact of it even from an insurance perspective for like homeowners or car insurance. They do
Hmm.
these credit checks, and it just it affects so many parts of our lives. And so I'm gonna just encourage people to not sit there and just act like you can't do anything. And it may not be a quick fix, like David said. Normally, it's not. It's something that's probably happened over the course of time. Now, again, you mentioned like it takes time to fix it, but you can screw it up like that.
One day, and I'll put some fear out there. So, you know, if if somebody has great credit,
Yeah,
700, 750, they're doing good. If they missed a $25 minimum payment on a credit card, right? It's only $25.
right.
As soon as that late payment showed up, you can count on losing somewhere between 100 and 200 points. It's the most devastating thing that there is. So, and now a new collection somewhere between 40 and 60. A repossession when that repo shows up somewhere between 20 and 40.
Right.
You could get $100,000 vehicle repossessed today, and your score once that repo shows up, you're probably going to lose 20, 40 points. If you filed bankruptcy, that bankruptcy hitting your credit report, you're looking at 25, 30 points. But if you miss a $25 minimum payment on that Capital One card because, oh, it's only $25, it's not that important, you are completely devastated. And a
Yeah.
late payment is the most difficult thing to address. So if
Wow.
it's like I tell my clients, and this is something that we even put in writing in our contract, not these specific words, but you'll get the point. If it's rice and beans and ramen noodles this month, it's rice and beans and ramen noodles this month. You get those bills paid.
Yeah.
So it's absolutely devastating. Um,
Wow. That's awesome. I mean, the content and the information that you just gave to people, it's really gold. So wait, listen, I want to start having you come on, like we do this. Well, honestly, if you can do it every month, I'd love to have you because it's it's,
I'm
it's
all
just
about
that
it,
important to me. It really is. It's that important. Um, and for people
and
that
there is enough content.
Yeah, exactly. Exactly. And honestly, even if we went over this again, I think people need to have a reminder and be reminded of what they should be doing, what they can be doing, and just encourage people because I know so many people get so discouraged when, again, because they're being fed a Vantage score and then they want to buy a home, and it's like, no, you're not there. I hear it, I see it, and I hate that for people, but that's what your specialty is helping people with that. So, but February 16th and the 17th, guys, if you're a realtor, come visit. We're going to have a class. David is going to go into a lot of more content on what you can do as a realtor to have that buyer, down the road. Again, you're going to need a buyer in 6 months, 12 months, a year and a half, 2 years, whatever. You're going to need buyers then too. So make sure you guys come check us out the 16th of February 16th and 17th. And I will get the information for the location on the 16th. I'll get that out to you guys. But if you got questions, reach out to me. David, thank you so much. All David's information, guys, was on there. Go check out thephoenixgroup.com. And then we'll see you guys soon. David, thank you so much. I appreciate you.
Absolutely my pleasure. Look forward to the next one.
Sounds good. Make sure you guys go subscribe to the mortgagebosstv.com as well. All right, that's the YouTube channel. Go subscribe. See you guys. Hey, thank you so much for watching this video. And before you go, do us a favor. Head on over to mortgagebosstv.com. That is our YouTube channel, okay? If you would give us a thumbs up for this video and subscribe, that way you don't miss any